A warm welcome and good morning. Sage here for Calcine TV and you're watching the early trades. Let's get started with our market open report. The Australian shares are trading lower at the open, with Woolworths and Coles leading this decline. The S&P ASX 200 index was down 36.3 points or 0.5% to 7,343. Woolworths was down 8.4% to $37.15 and Coles was trading 4.7% lower at $17.03 following a disappointing trading update from Woolworths, which revealed COVID had weighed heavily on earnings during the first half. Afterpay was trading 2.9% lower at $91.98. Nearmap was trading 11.6% higher, however, at $1.64 after revealing strong growth in its North American annual contract value portfolio. GrainCorp was up 3.1% as well to $7.64 and Blackmores was trading 2.2% higher at $89.37. NAB's Business Confidence Index for November is due at 11:30am Australian Eastern Daylight Savings Time. And Afterpay is scheduled to hold a vote on a takeover offer from the US giant Square. Hub24 holds its annual general meeting. And now, let's take a look at some of the newsmakers from today's session. Afterpay's shareholders have voted unequivocally to approve its acquisition by Block, formerly Square, the penultimate step for the blockbuster deal that now only requires approval from the Spanish Central Bank, which is expected in mid-January. Proxies received ahead of the Tuesday morning virtual meeting showed massive support for the deal. Almost 200 million shares were voted in support from almost 2,000. And Afterpay shareholders. There were just under 100,000 votes against from 100 shareholders. And this allowed the scheme of arrangement to be passed by a huge majority, even as the value of Block shares sank over the recent weeks. And Novartis has terminated its agreement with Mesoblast prior to closing. A deal was struck in Novartis last year, which included an initial payment of $50 million, including $25 million in equity, with the potential for up to $1.25 billion in additional milestone and post-commercialisation payments. Mesoblast's agreement with Novartis was dependent on successful outcomes from the clinical trial into treatment for COVID-19 related acute respiratory diseases, or ARDs. Mesoblast said on Tuesday the observed mortality reduction with remestemcel-L in patients aged under 65 in the completed COVID ARDs trial. Despite having missed the primary endpoint, it considered by Mesoblast to be a sufficiently strong signal to support pursuing an emergency use authorisation, and the most direct path to market as well. PolyNovo says its US sales have more than doubled in the second quarter of the year compared with the year prior. And the US sales for the quarter are already at $4.66 million in the first 2 months, up 133% for the same period last year. November was particularly strong, almost equaling the record month set in July, with US $1.95 million in sales alone. And the company said it was monitoring the possible impact of the Omicron variant on being able to access hospitals and healthcare professionals. But to date, there did not seem to be any impact, and the company said it was confident that it was better positioned to respond than previously. And BGH Capital has made an unsolicited, non-binding $607 million bid for Virtus Health. The proposal attributes a cash value of $7.10 cash per Virtus share, which will be reduced by the value of any dividends or other distributions declared, proposed or paid after today's date. And BGH has acquired 8.5 million shares, representing a 9.99% interest in Virtus at $7.10 a share. It has also entered into a total return swap with UBS that has yet to settle in respect of 8.6 million shares, representing a 10% interest in Virtus, which provides BGH with an option to elect physical settlement of that 10% subject to the Foreign Acquisitions and Takeovers Act of 1975 and the Foreign Acquisitions and Takeovers Regulation of 2015. And CSL has entered a trading halt ahead of a potential acquisition and associated capital rising. The trading half is expected to remain in place until an announcement is made regarding the completion of the capital raising or the commencement of trading on Thursday. So Woolworths' first half Australian Foods earnings are expected to be weaker than a year ago, with COVID-19 costs still biting the supermarket giant. And for the first half of the year, the company's Australian Foods EBIT is expected to be between $1.19 billion and $1.22 billion, down from $1.312 billion over the same period a year ago. The company said while its sales and customers remained strong relative to the overall market, both indirect and direct costs associated with COVID-19 had weighed. And thanks for your company on the report. That's all for now in the early trades. Please stay tuned to Kalkine TV as we have many more shows lined up for you, sharing live updates across the economy, markets and sectors. Sage signing off for now.